Hello friends, if you still think GST registration is a lengthy process involving notices, clarifications and long waiting periods, then there is an important practical update now visible on the GST portal. A new practical option is now appearing in the GST registration process under Rule 14A, introduced as a simplified GST registration scheme. And if an applicant is eligible, the portal guidance indicates that registration may be granted electronically within 3 working days, subject to successful Aadhaar authentication. However, this option is not meant for every taxpayer. In this video, I will explain the complete practical process, who may be eligible, where this option appears on the portal, which documents should be kept ready, how Aadhaar authentication works, and most importantly, the hidden restriction that many taxpayers may overlook. Let us understand this step by step. First, let us understand what registration under Rule 14A actually means. When a person applies for a new GST registration through form GST REG-01 on the GST portal, a field is now visible in the business details section called Option for Registration under Rule 14A. Here, the applicant has to select either yes or no. If the applicant selects yes, it means the applicant is opting for the simplified registration route under Rule 14A. According to the portal guidance, this option is relevant for taxpayers who, on the basis of self-assessment, believe that their monthly output tax liability will remain within the prescribed threshold. This threshold has been indicated as 2.5 lakh rupees per month. Therefore, the first practical point is this: do not select Rule 14A blindly just because it may result in faster registration. Before selecting this option, assess whether your business pattern, especially your supplies to registered persons, and your output tax liability is likely to remain within this threshold. Now let us come to the complete practical registration process. Step 1. Open the GST portal and go to the Services menu. Under Registration, click on New Registration. The registration application is completed in 2 parts, Part A and Part B. In Part A, enter the basic details. These include the legal name as per PAN number, email address, mobile number, and state or union territory. After entering these details, OTP verification is completed. Once OTP verification is successful, a TRN, that is, a temporary reference number, is generated. Using this TRN, the applicant can proceed to Part B of the application. Step 3. Using the TRN, log in again and continue the detailed registration application. At this stage, the business details section becomes very important. This is where the Rule 14A option may appear. If the applicant is eligible and wishes to opt for the simplified route, the applicant may select yes here. However, this choice should be made with practical understanding and not merely for speed. Step 4. Now fill in the business details carefully. This includes trade name, constitution of business, district, reason for registration, date of commencement of business, and nature of business activities. Mistakes here can be costly. Wrong constitution, wrong commencement date, wrong activity selection, or incorrect reason for registration may lead to future clarification or procedural issues. Therefore, these details should be filled strictly in line with supporting documents. Step 5. Next, fill in the details of the proprietor, partner, director, karta, members, or other stakeholders, depending on the constitution of the business. These details should match the PAN and Aadhaar records correctly. Step 6. After that, fill in the details of the authorized signatory. The primary authorized signatory should be selected carefully. In the context of Rule 14A registration, Aadhaar authentication becomes highly critical, so the signatory details must be completely correct. Step 7. Now fill in the details of the principal place of business. The full address has to be entered and the address proof has to be uploaded. If there is any additional place of business, that should also be added. At a practical level, address proof may include an electricity bill, property tax receipt, rent agreement, consent letter, municipal document, or any other accepted supporting proof, depending on the case. The most important point is that the uploaded document should be clear, current, readable, and properly matched with the address entered in the application. Step 8. Next, enter the goods and services details. This includes the main goods or services supplied by the applicant, along with the relevant HSN or SAC details. Step 9. Bank account details should also be entered wherever required in the application. Step 10. At the verification stage, the application is submitted through DSC, EVC, or e-sign as applicable. Once the application is successfully submitted, the ARN, that is, the application reference number, is generated. Now comes the most critical practical stage, Aadhaar authentication. In the context of Rule 14A, Aadhaar authentication is treated as mandatory. This is a very important point. If Aadhaar authentication is not completed successfully, the practical benefit of a simplified fast-track registration may be lost. For Aadhaar authentication, the relevant person receives an authentication link from the portal. This link is sent to the registered mobile number or email address, and authentication is completed through Aadhaar-linked OTP validation. At this stage, most practical issues arise because of reasons such as Aadhaar not being linked with the active mobile number, mismatch in details, incorrect signatory selection, or delay in completing the process. Therefore, before filing the registration application, it is extremely important to ensure that Aadhaar details, mobile number, email access, PAN details, and role mapping are all correct. Now let us come to the most attractive feature of this route. The main practical attraction of registration under Rule 14A is that registration may be granted electronically within 3 working days, subject to successful Aadhaar authentication. In other words, if the applicant is genuine, documents are proper, Aadhaar authentication is completed successfully, and there is no mismatch or risk-related issue, then the registration process may move relatively fast. However, now comes the most important hidden restriction, and this is essential to understand before choosing this option. If a taxpayer has opted for registration under Rule 14A, and later the monthly tax liability on supplies made to registered persons, or in practical terms, the B2B tax reporting level, exceeds the prescribed threshold of 2.5 lakh rupees per month, then a portal restriction may arise. According to the practical portal guidance, in such a case the taxpayer may first have to complete the withdrawal process from Rule 14A registration before continuing normal reporting without restriction. In simple language, this means that the scheme is suitable only for those taxpayers who genuinely fall within the small taxpayer category and whose output tax liability is expected to remain within the prescribed limit. If a person expects business growth very soon or expects B2B supplies to cross the threshold in the near future, then selecting Rule 14A merely for faster registration may create compliance friction later. Therefore, before selecting Rule 14A, practical self-assessment is absolutely necessary. Now let me give you a quick practical checklist. Before starting the registration process, keep the following ready: PAN details, Aadhaar details, access to mobile number and email, proof of business constitution, photograph of the applicant or signatory, authorization documents wherever required, proof of principal place of business, proof of additional place of business if applicable, bank details wherever required, and most importantly, ensure that the Aadhaar-linked mobile number is active. Now let us discuss the practical mistakes that should be avoided. Number 1. Do not choose Rule 14A blindly. Number 2. Do not file the application with Aadhaar mismatch or inactive mobile linkage. Number 3. Do not upload weak, unreadable, or mismatched address proof. Number 4. Do not provide incorrect authorized signatory details. Number 5. Do not casually enter business activity or commencement date. And number 6. Do not choose this option only for speed. Understand the future compliance impact as well. So the overall practical conclusion is this: the Rule 14A option on the GST portal is an important new development in the GST registration process. For eligible small taxpayers, it may act as a faster registration route. If the monthly output tax liability remains within the prescribed 2.5 lakh rupees limit, documents are proper, and Aadhaar authentication is completed smoothly, then the registration process may move significantly faster, including within 3 working days as indicated. However, this option should be selected carefully, because once the threshold is crossed, future reporting restrictions may arise and a withdrawal process may become necessary. If you are planning to obtain GST registration, or if you are guiding clients through the registration process, then understanding Rule 14A has now become very important. Thank you for watching. If you found this practical update useful, please like, share and subscribe. I will continue to bring you the latest GST, tax, audit and professional updates. Jai Hind.